Hey, what is up, guys? Let's look some more at what we were talking about whenever that was. What was it? 26? That was 2 days ago. I had to kind of end that video abruptly because it was a busy day. Um, so I'm still at work, but I do have some time right now to go over some of these things in more detail and show you how to find your own plays if you want to. But you have to understand support resistance. So we'll get into that a little bit. And again, I'm going to try to keep this under 30 minutes if I can. So going as quick as I can. You can speed it up, pause it, whatever you want to do. And again, my if you just go to at bike for sale, bike the number 4 SAIL, you can find my Twitter. Same thing on Trading View. I post these things to try to help people to make money. I'll try to get you the plays as quick as I can, but sometimes I don't get them quick enough. Real quick, we'll look into here's crypto market cap on the 3-hour, and here's Bitcoin on the 3-hour. These are just EMA lines here. It's kind of breaking down. This is a long-term downtrend line, this white line that I think will find some support. But ultimately, the crypto market cap in total could come down further. I don't really watch Bitcoin levels as much. What's more important is Bitcoin dominance to me and what the overall market cap is doing. And we could still see, if Bitcoin dominance was to come back up to this white line, which, it's hard to stop momentum once it starts, and it looks like it's headed that way, might reject right there. This would be a good place to buy altcoins. That would be, I don't know, somewhere anywhere between 55 to 60%, something like that. And that typically happens before the real breakout of the bull market happens. So it just seems like altcoins are suffering versus Bitcoin right now. All right, so here's the range we were talking about last video a little bit. It seems to me it's probably going to stay within this range right now. If you lose this level with Bitcoin, then the altcoins are really going to hurt because you don't even see any more support until you get down to here. So if we hold 29.7 roughly, I think altcoins could do real well while Bitcoin goes sideways, and they have been a little bit. If you look at the altcoins in general, yesterday they had a really good day. But this level right here at the top of this highlighted area, 27K or so, 27.2, that would be the next level of support. If you lost this one, I believe, because I think the momentum would bring you down there. And it does seem like money flow is coming out, RSI is going down. There's a lot of things supporting that idea. This is kind of a worst case scenario for altcoins that I worked up yesterday and I posted on Twitter. Currently, we are below a line of support. I mean, there's another line of support right here, I would say. That's a weaker area of support. So I'll just put a dotted line there. But I would say if you get a candle close below this one on the 3-hour, or sorry, this is the monthly. If you get one closed below this on the monthly, then it's at least coming to here. And if it loses that, momentum is probably going to take us all the way down here to 110 billion. And what this is total 3. If you type in here total 3, it is crypto total market cap excluding Bitcoin and Ethereum. And I wouldn't say this is abnormal necessarily. It happened pretty much the same way before the last bull market really got going in 2020 roughly. So that was a 92% drawdown. This one currently I think is around 70 something percent. But if it was to do a 90% drawdown to the golden pocket, that's that fib retracement from the bottom to the top, then that would put you right around 110 billion. And if this was to happen, a lot of altcoins that haven't reached that 99% drawdown yet would see this. I mean, once you hit 99% drawdown on an altcoin, it's not like it's going to hit 100%. It never can. So, your altcoin could keep going down back to pre-pandemic levels, which would be kind of around that area. That would be more like this at 80 billion. This is just above that. So I suppose, 80 billion is a possibility. But like I said, this is worst case scenario. I'm not saying it's going to happen. It's just something you can watch out for. If you get a monthly candle close below this level right here at 290 billion, then this is the likely scenario to play out, and all altcoins would bleed, and likely Bitcoin would bleed as well, but just not as much as altcoins. All right, here's one we talked about last video 2 days ago. And what I was saying is ZIL looks like it could be ready because it's coming back down to this area of support. There is some support here to hold it up. And previously it did get a couple buy signals because it broke above. It's probably hard to see this without me zooming out. So just to reiterate, let me go to the monthly because it's even easier to see there. Like if I'm completely zoomed out here, you can see these purple areas are my support resistance areas. And so if the price closes above support, that's the signal to take a long. If it closes below the support, then you take a short. Like if we think about what happened or what we were showing on that total 3 chart, and the worst case scenario happens, then basically what's going to happen here on ZIL is it might just kind of follow this line all the way back down to here, roughly. What is this, March? Yeah. So it would probably stop somewhere in here about 0.006 cents. And I know that's hard for a lot of people to believe, but just understand that that's a worst case scenario situation. I would imagine the recession would be in full swing. I mean, it really already is, but all the fears that people have about a recession would come to light at that point. So, if you get a candle close below here on ZIL, especially if it closes below these 2 candles on a monthly chart, it's definitely coming down here. I mean, it's just, there's no way to stop it at that point. So I wanted to zoom out just so you understand what these purple lines are. And then the blue lines are, they're trend lines that I've drawn from tops, what we call a hill to a next hill. And it's just projecting to see if that price action is going to reject off of it. Because you could take a short every time it comes up and touches this. This is just another strategy you could do. So every time it, like say if this comes up here and touches this blue line again, you could take a short there. But if it has a candle close above that, then you can just close the position. And that's really what successful traders do. They trade around certain zones. They don't just trade here in the middle where there's no support lines or no trend lines. They wait till it hits a trend line or grows above a trend line and is near it still, or the same thing with a support resistance line if it's near it. That way you can set your stop loss real close, and you don't have to set an actual stop loss on the exchange. Although if you're going to sleep, it's probably a good idea. What you can do is if you're currently in a trade, especially if it's a low time frame trade, like a 15 or 45 minute trade, you want to be near your computer. And then like say, for instance, here I am on the 45-minute chart. If I was to get a candle close below this trend line that I drew, then I would just go ahead and exit the position. I can always re-enter, right? I mean, if it comes back up here and closes the candle above the blue line, then I'm back in. But look how much money I'm saving if I'm right. And, candle closed below, it came all the way down to here. Now I can buy again because I'm at a support line. And it's going to happen where, maybe you have to make 2 or 3 entries, but you're taking small losses to get the big gain. And you're not sitting in a trade for a long time when it's doing nothing. Okay, let me just go back to what I was saying. Now that you understand what those lines and everything are. I think when I made this call, it might have been somewhere in here on my Twitter. Well, let me just look at it real quick. I want to see what date it was when I made this call. Trading view. All right. ZIL right here. Okay, 26 is when I did this. Well, we can just go look at the trading view, right? So here's where it is currently on this chart. And I was saying, I've got all the rules down here. So if you want to look at the rules on how to play it for yourself, it's all right here. And you can learn to do this for yourself if you just, kind of get used to what these rules are. So currently it is sitting right on this downtrend line. You've got some overhead resistance. It might be hard to see, but there is a dotted purple line right here. So there's a lot of resistance right there currently. And that's exactly what happened here. It had a candle close back below it. So basically it's kind of neutral bullish in a way. To get fully bullish, it would have to get above this line. But I wanted to make sure that people understood that there is a chance it could come down if it can't get above that. And that's kind of what happened. I mean, it rejected here. It started riding down the line, and now it's had a big break to the downside. It's still bullish on a short term. However, if it closes, well, number one, if it closes below this blue line on the daily chart, you can use that same rule on any chart. It just depends on how much time you have to trade. So if you're somebody that doesn't have a whole lot of time to trade, just do the daily chart and buy above support areas. But then if it turns around on you, has a candle close below the support, then you just get out and wait for a better opportunity. So that's what you're looking for here. If it gets a candle below this downtrend line here, it's probably coming down to here, but you could just rebuy. If you get a candle close back above the support level, then just rebuy. It's that easy. What you're trying to do is avoid the big loss. That's the whole play here. That's what you're trying to learn. And you can do it on any time frame. So here we are, 3 hour. We don't have a full candle close yet. When I say full candle, I mean the entire body of the candle has to be below this blue downtrend line. And then if you do that, if you say, okay, I'm going to take a short here, or I'm just going to close the long that I had, then just wait to see if it comes back down here. And if this support holds, then just get back in, no big deal. Or you could just wait until it closes back above this blue line. I mean, it's really that simple. And what this is right here is called Engineering Robo. You can look them up. They do have a website. It is a good indicator package, but it does cost money. But like I said last video, you don't have to have it. You can trade for free and make just as much money. This is just something I have on to kind of give me extra confidence in the trade. Here was your buy signal down here. You got a candle close above. It went all the way up here to this resistance. You could have taken profit there. And now, we're just kind of wanting to see what happens here. You do have two sell signals on the 3 hours. So you could have already gotten out, but it could still hold this and come back up. It doesn't mean it's coming down. All right, here's Quantum. Quant. That's the name of it. Let me see when I posted that. It's probably the same day. Yeah, I said I was going to come back and put the notes, but I never did. I need to get back in there and do that. So June 26th, when I did that was 2 days ago, which would have been right in here somewhere. So what I would have been saying at the time is, if you lose this blue line and get a full candle, which is either of these candles here, then you can just go ahead and get out if you want. If you took a long here, you could have gotten out here. And yeah, it is bullish on the 3 hour using Engineering Robo. There's two buy signals, but these would be the rules. Like, say if I didn't have this at all. So here's just regular candles. And now I want to use RSI, let's say. So I'm looking at RSI. RSI is below 50. I had my two candles close below that blue line. So I probably would have gotten out right there, actually, if I took a long here. However, there's something else to look at here. This white downtrend line is actually the longer term trend line that you could use. It's stronger than this one because this one's more short term. This one here, I drew all the way back. Let's see, I started drawing this one all the way back October 16th, 2022. And it's had, well, actually, I wouldn't have drawn it till here because this was the second hill. But you can see it's treated it as resistance the whole way. So maybe what's happening, it had one fake out here up and it rejected off this shorter term trend line. But anytime you see a white line on my chart, that means it's a longer term trend line, and it's one that you should respect more. So let's say you didn't get out of your trade yet, just as an example. So you're still in this trade. You're still above the white line. So there's nothing wrong. I mean, you could stay in this trade definitely. But if you get a candle close below the white line, then I would say, it's probably time to close the trade and just wait to see what happens at support. And if you get, a candle that stays above support here, I would just re-enter. But, long term, you want to see it get back above this and stay above it. That's the goal. But, below 50 RSI is definitely bearish. It just depends on if it's going to hold this white line. There's no way to know that just yet. And it does look like your 3-hour money flow down here, although it's in the green, it is trending down. And you're fully in the red on money flow. This money flow on the daily chart is in the red, however, it is trending up. And that's one thing to understand about crypto or, any trading strategy, whether you're doing stocks, doesn't matter. And I'll just draw over here to kind of illustrate an example. Let's say you've got I don't want to say 5-minute chart, that's too low. Let's say you got a 45-minute chart here and you got a daily chart over here. The daily chart's going to move much more smoothly. So, if you're in a bull market, you may see something like this, where it's just, up and down, coming back down to retest the, it breaks resistance, retests support, breaks resistance, retests support. So you may see something like this on the daily, but if you go over to a 45-minute chart, you're going to see something much different, like, the Wyckoff structures and, things like this, where it's just kind of bouncing around all over the place. And this right here, from here to here, that may only be that area on the daily chart. It may just be from here to here. So just understand that that's the difference between time frames. You have to keep that in your mind, that if you go down to a really low time frame, you're going to get faked out a lot. So if you don't have time to keep an eye on charts, I would definitely suggest just sticking to like a 3-hour or a daily chart and watch the RSI. Over 50 RSI is bullish, below 50 RSI is bearish. If you get a cross above the 70 line on RSI, like say back here, for example, it's usually not going to stay up there that long. It's way overheated. There's been too many people that are profiting off of it or that are in profit. And there's less people that are willing to purchase the asset. And so now the sellers are starting to step in and they want to push it down because they want to take their profit. And that's typically what you're going to see. It's going to get overheated for a little bit. And then once you cross back below 70, you're going to get a big drop, or, something like that's going to happen. Here's a good example. It came up. It kind of rejected at the 70 for a while and just barely got back over it and then broke below it. And that's when this big drop happened right here. And then when it got under 50, it dropped even harder. And then on the flip side of it, if you get below the 30 line on RSI, it's not going to stay there for long, usually. That means it's oversold. Too many people have shorted it. Maybe it's been sitting at the bottom of support for a long time, and people are just now noticing that it's a good value. And so a lot of people start jumping in. So once you get that cross back above 30, and especially if you get a bullish divergence where it's a high or low, you're going to start seeing some buy pressure step back in. And notice that it's still in a bearish state. It may be a good value down here. It may not be. It may go down some more. But just notice that it's still in a bearish state as long as it's below the 50 RSI. Once it crosses above, as you can see here, it just took off. And you're creeping up to that 50, well, you're above the 50 line currently, and it's trying to hold it. And so that's why this was a coin to keep an eye on, because it could be ready to make a move, but it may not make a bigger move until it establishes higher up on the 50. Yeah, that is a daily chart. Yeah, see, on the 3-hour, we're bearish, and that's the problem right now. I think once your 3-hour gets back above 50, as long as the daily is still above 50, you'll get a pretty good move. So it's just a waiting game with this one. All right, here's another really good example. Let me see if, did I put ANKR on here? Yeah. So ANKR, I put on the chart the 25th. And here in a second, I'll get into newer coins if there are any that are volatile that we can get into. Let's see. So just taking the RSI into account here, we're below 50 RSI on the 3-hour, and we are just barely below it on the daily. And I'll always, this is a good point. Always start from a zoomed out look. So at least start on the daily chart and just get a feel for what you're seeing. I mean, if I'm looking at this is bearish. It was bullish back here, but then it hit all this resistance up here and it broke back below it. So now you've got many candles closing below what turned into resistance after it failed support. And so currently I'm bearish. I mean, there's just no other way to look at it because it keeps rejecting off of this line and it's below that resistance line there. If it was to come back down to this support level, probably a pretty good buy. But you can see that I put these profit taking areas here. There's another little minor support area below. And the reason I put these here is because if you wanted to enter this trade once a candle closed below resistance, and I did let people know that in the trading rules, you could start taking some profit here, or you could just see if it continued to close below this minor support, then you could take another trade here. And it may come down to here and then bounce off this again and then get real tight and then take off. It's typically what happens. I mean, it's just the nature of the up and down cycles, the Wyckoff cycles. And I don't like getting into Wyckoff. I'm just a purely technical trader. I don't like to look at trends. Although I guess, this is a downtrend, so technically it's still a trend, but personally, I don't care about Wyckoff. It just doesn't, it's too long-term for me. I like to trade on shorter time frames and scalp. And so here's your short, here's your other short, here's your long. So if you get a candle close above this one, then you can take that long right there to here, and it could keep going. So, this is just a partial profit take. You could maybe just get all of your initial investment back and let the rest ride. But then if you got, candles closing below here again, and it started looking bearish, then you could just close your whole position. Or you can move your stop loss up. Like say if it did something like this. Say a candle closed above this and it started moving around. It got up here, you took some profit, or maybe you took some profit higher into the resistance area. And that's a resistance zone. I forgot to label that. That's what I call it. It's a support and resistance zone. So here's your support, here's your resistance. It's 3 different lines that are, it's not one single line. You have to kind of treat that as more of a zone, because wicks do happen within those areas. What was I saying? Yeah, so let's say it got up to here and you took some profit. So if you would have purchased here somewhere, just go ahead and move your stop loss up, maybe to the next, like say if this was some kind of new support line right here or something, or, if you just wanted to move it halfway up or something, just go ahead and do it. I mean, there's no need for you to lose out on other profits and keep your stop loss way down here. So, you can move your stop loss up as price moves up. Just make sure it's not so tight that any little pullback is going to hit your stop loss. But then that way you're still in profit if it turns around on you. All right. Yeah. So basically what I was saying on that day when we were looking at this, I said, if it rejects this line, if you get another candle close below this resistance line, then you either want to be short or you want to be out of your long if you were in a long. So just keep that in mind. I mean, hopefully you're starting to kind of get the picture of the way I trade these. And I'm not saying I'm perfect at this. I mean, I lose, sometimes I lose money on these trades. But again, if you're 30 to 50% successful on trades, I mean, just 30%, and you stick to your rules, you can become a millionaire no matter what amount of money you started at. It'll take longer, if you have, if you're just starting out with like $1,000 or something, but just stick to your rules. Here's a good example. This is waves. It had a nice move up, and I post all these charts. If you want to post in the comments below, and leave a like, by the way, so your friends can see it. If there's people you think could would like to make some money off of these. But if you want to post in the comments, I can share any of these charts with you. And then that way you can copy the chart for yourself and make your own notes, whatever. You have to have a TradingView account, by the way. A free account may work. I'm not sure. You'll have to check on that. But if you want to, you can go up here and do, where is it at? There's a copy button somewhere. Here it is, make a copy. So if I click that, like say if I was copying somebody else's chart, I could just type whatever I wanted to here. I could type waves, my copy, or whatever. And you can make your own notations, hit save. But then you'll have all my support resistance lines. You can use this forever. If it's a coin you really want to follow, these lines work. I mean, look how it's respected. Like right here, it rejected. You got a full candle close below that resistance. Right here, you got a candle close above. Actually, it may have been that one. You could have taken the long there. You'd have made a lot of money. Take profit there, move your stop loss up. You would have kept making money. You could take more profit here. So these are profit-taking lines, or they're a place to close your position. Just remember that. So currently what you're looking for with waves on a 3-hour chart, see if a candle closes below here. If it does, you can take the short. I would be careful how much leverage you use. Never use over 20x, in my opinion. There are two different ways to leverage trade. One is called isolated. One is called cross. The cross margin means that it uses your entire account portfolio. Like say if you have $1,000 in there, if you have multiple trades open, they will all use that same amount of money to check your margin position. If you get liquidated for any reason, if things completely turn around against you and you're using cross, it will take your entire amount of money that you have in that account. So you have to be careful with that. If you use isolated, then your whatever amount, like let's say you just invest $100 on one trade. If that trade goes against you and you get liquidated, you would only lose that $100. So it's individual to that coin. So it's really up to you. On isolated, the issue with that is if you're doing something like a 20x, and I say never go higher than a 20x. It's very, very dangerous to do that. You can lose money quickly. Even with 20x, it's kind of dangerous. I would say 3x is a good sweet spot for a new person because it gives you some room to, for it to move up and down. But if you stick to the rules with a 3x or even a 10x, I think you'll be fine. But what I was saying with 20x is if you're using an isolated option under your margin account to open a trade, then it's going to liquidate you quicker than cross would, just because there's less money that you're putting into that margin. And maybe that's confusing to you. If it is, just go on YouTube and find a video about how to margin trade and you'll understand it better. And then you can come back and listen to what I said here. Currently, RSI is under 50, so there's really no reason to take a trade. If it's over 50, you're bullish. If it's under 50, you're bearish. So there's a pretty good chance that you're going to get a candle close below here, and it could come all the way back down to here, or there's some support areas here. Like if I drew a line here or somewhere in here, there's some other supports that it could find, some areas to hold and come back up. And money flow is coming down, so that's another thing. All right, TOMO. This is one that I'm watching for on a short. So this sometimes you'll see these on my charts. They're just scalp zones, and what I know to be true on these is if I get a candle close below these zones, then there's a pretty good chance that it's going to be a good scalp short. If I get a close above it, there's a good chance that it's going to be a good long. And currently there's a lot of resistance up here, especially at this resistance area. So my expectation is it's coming down to this line most likely because money flow is coming out of it. Now, sure, it is over 50 RSI on the daily chart, but you can see it's been losing momentum. So price has been going up while momentum's going down. That's a bearish divergence. So I'm kind of watching this range here currently. It's kind of bouncing between this range, and it has closed a candle below it. Well, sorry. I've got about 3 hours until it closes a candle below this, if this one remains true. So I would say this is a pretty good indicator that it's losing even more momentum. And you can see RSI is coming down, money flow is coming down. If you go to a lower time frame, you're below the 50 RSI, money flow is really coming down. It's trending down big time. So, that's what I would say about that one. So this is a good short opportunity. It hasn't really proven itself on the 3-hour just yet. You need that candle to close below. And just because you get a candle to close below doesn't mean it's automatically going to dump. I mean, it could be a fake out and then it could get back above this line. So if the candle does get back above that line, then you're probably out of the short. But you would hold this short if it did happen. Most likely, I mean, there is a small little support area right here. I kind of doubt that it'll hold, but it could. But if it was to break below these two areas, and especially get below this highlighted area, it's coming to here. And then if you get a candle close below here, then it's kind of one of those lookout below scenarios, because any candle below this one, there's just not a lot of support to grab it until it gets to this line. You can look left here. There's a big gap for it to fill. And so that's a pretty good profit margin if you can, if that trade plays out. Yeah. So on the daily, these just take so long to play out, though. I mean, one thing to remember on coins is, even though this was a really nice bullish move, it took a long time. It was I don't know what the word is I'm looking for. It was a good sustained slow march up. It was just marching up this line. So I would suspect that when it comes down, it won't be extremely violent. Let me hang on. Do I not have ASTRA? Oh yeah, ASTRA's right here. Here's a good example of more of a violent drop on a coin. So the bigger explosion that you get, like this one was straight up, the bigger or the quicker downfall there's going to be. So just remember that. This one was a little bit more tame, but the drop was still pretty good. And how you would have played this one on a 3-hour chart. Yeah, see, none of these candles, if you look real closely here, none of these 4 candles had a full candle close below this zone, this purple zone. This was the first candle right here on June 17th at night. Well, locally for me at night. So once you saw this, you could have taken your short. And then this was your profit taking area. I mean, I know, I'll agree. It's easy to look back at these and say, oh yeah, look, it's so easy to look back and say, oh, well, he's just looking back at history and look how easy it is to show that this actually worked. Well, I'm trying to show you these also in real time, what to watch for. And again, something like ZIL right here, if it gets a candle close below and you exit, but then it fakes you out and comes back up, this is just a down fake out, and you get a candle close back above, you could re-enter, that's fine. I mean, these are just some of the tricks you can use. It's very difficult to trade crypto or anything really, especially crypto, because it's so volatile. The market makers, let me just show you something here real quick. Actually, I'm going to show you on, what do I want? Oh, TOMO, yeah. Yeah, I think that's the one I want to show it on. Let's just look at a weekly chart, and I'm going to bring up a different thing. It's called Trader's Reality. And what this shows is the liquidity zones. The market makers know where most of the liquidity is. I mean, they're not looking at something like this probably, but they could easily look on their systems, whether they're with JP Morgan or whoever, whatever big, they're a bunch of liars to me, but I mean, they cheat people out of money is what happens, but that's the risk we take. We have to understand that this is a game. We're trying to take their money, and by doing that, we're sticking to our rules. We don't want them to take our money. And so what this shows is that this coin could come all the way down to here. And there's a guy on YouTube called, I think the name of his channel is Trader's Reality. But usually what happens is these big green vector candles that happen, where there's a big pump, eventually it comes back to, and some people call that a gap, but usually it comes back down to revisit that area. So there's a lot of people that took a long here. And if the market makers come down, you can see some of these are back here too, near these support areas. If the market makers were to bring it back down to here, what they're actually trying to do is grab these people's money, because there's a lot of stop losses set in these areas. And so they're just going to liquidate these people, and then maybe they'll take it back up. I don't know. But this takes a while to happen. It doesn't just happen all of a sudden. They want to put you to sleep, or they want to, and I'm talking about the market makers, or they want to just shoot the price up real quick so you have no chance to get in. And then once the price is already up there, you go ahead and join in, thinking that the price is just going to keep pumping, and then they turn it around on you. And what's happening there is, as price pumps, they're already layering in their shorts. So they're making money both ways. So as price comes down, they're starting to add to their longs. The rules don't apply to them. They run these exchanges. They run the whole system. So when the rules don't apply to you, and you don't have to set a stop loss, and you can just take a loss forever, because you're going to turn it around eventually and make a bunch of profit off of it. So they're layering in their shorts. They're shorting here, shorting here, shorting here. Or sorry, scratch everything I just said. They're longing here. So they're starting to add to their longs as price comes down. And then once price turns around, now all those longs are starting to make money. And so once they start getting back in profit, now they're going to start shorting, even as price is going up. And then as price turns back over, they're starting to make money off those shorts. And then they'll just start doing the whole thing over again, adding to their longs as it comes down. I mean, this is a very basic, simplistic way of explaining it, but that's how things operate in their world. I mean, we're not in that club. We don't get to take advantage of stuff like this, but we can take advantage of the volatility. We've got to stick to the rules, though. All right. Hopefully that's clear. I mean, I know I didn't really mean to jump into that tangent, but that's something that I truly believe happens. And there's many others that do as well. These markets are fake. And there are some crypto coins that actually have use cases. Like I talk about Gala all the time. Gala actually has games that people in developing countries have made money off of to pay for their rent, to pay for a house. I mean, people are actually making money off of games like Gala, and Gala has a real product, and they continue to develop it. But I guarantee you there's 95 to 99% of these coins that are just a bunch of scams. It's already been proven that the government funnels money into these projects, and that's how the rules don't apply to them, right? Because they're the ones in control, or somebody above them is in control. But this money is funneled into these projects or funneled into Ukraine, so that they can money launder, and it's not so obvious to the public. Because if the public really knew this stuff and believed it, I mean, there's a very small percentage of people that really even know this, but if they really understood this, they would be knocking on the doors of every one of these senators, whoever, because it's just one big lie, and taxpayer dollars are used to fund this stuff. But anyway, you got to live your life. I mean, there's nothing we can do about it. Just live your life. Don't worry about what these other people are doing. Try to make your money if you can, and stick to your rules. Come up with your own rules, by the way. That's a good idea. And again, you can, if you want to look at some of my rules here and just adopt them until you can come up with your own, you can do that too. You just go to TradingView and type in my bike for sale name. All right. So we were going to look to see if there were any coins currently that are in a position, maybe they're volatile, and we can look at some new coins that I can post on TradingView and Twitter, and just talk about here real quick, because I do have some friends that are interested in me providing trades for them. I can't hold your hand through it, though. You got to learn this for yourself. You're more than welcome to use my charts. If there's any charts you want me to share so you can copy them, post in the comments below. I'm more than happy to share them. Feel free to use them. I don't have any control over your trades. this is just consider this entertainment as far as YouTube's concerned, because I'm not an investment advisor or anything like that. I mean, I'm showing you how you can do it for yourself, and you're responsible for it, not me. You just have to stick to your own rules once you come up with them. Okay, what you're looking for, if you get, like say you have, okay, let me start here. And maybe this should be a whole nother video actually, but maybe I will make it a video. If you go down here to Trading Views thing where you can filter a bunch of coins, you can set your exchange somewhere in, okay, here it is right here. So whatever exchange I'm using, if I'm using BingX or I'm using BitGet or BitThumb, or, I don't have access to some of these, but maybe you're using Binance or Coinbase. You can select just your exchange. And then when you go back over here, it'll only show the coins on your exchange. And then once you do that, just highlight all of them, right click. Well, first you need to make sure you've got over here, create new list, right click, once you select all your coins that you want over there, and add all these, add all those coins to watch list. That's how I got this one. And so what you're looking for once you get there is, if you see a coin that has gone up 50%, it's gained 50% on the day, or maybe 100% over a couple of days, that's a lot of volatility. You want to look at that coin for a short. If you get a coin that's gone down 20 to 30% in a day, then you want to look at that coin for a long. And the long's not going to happen immediately. And the tough thing for you is going to be that you may not understand how to do support resistance lines. So let me just do it real quick for you. This should be a whole another video, because I don't like these to go too long. But I'm just going to fly through this real quick. So here's one right here. It's gone down 26%. I don't want to use this one because I think it's a new coin, but this one's called XRD. You need something with some history if possible. I'm going to use MEXC maybe. Okay. And make sure you're on logarithmic. I think I'm on that. No, I'm not. Here we go. And what you're looking for is these hills, places where it rejected real hard, or places where it found good support, like here, 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 here. Those are your areas that are the most important. And so what I would do is I would just go in here and, I'd put a line here, put a line here, and do all that. And then once I got all that in place, what would happen is these lines would show up here, or these zones, and I would know where the support areas were. And so let's just say if there was a support line here, what you would be looking for is, if it dipped below it, you'd wait for a candle to close back above it. Because it happens the opposite way too, right? If you got a big dip real quick, usually it's going to find support somewhere and give you another, a little bit of a pump up, and you can make some money real quick. So that's what you're looking for, is real volatile coins. And what I'll do is I'll work this one up after I post this video, and I'll post it on TradingView and show you what it looks like with all the lines drawn and everything. But currently, like if we were to bring up Engineering Robo, it's going to tell us it's bearish, obviously. But yeah, here's your bearish signal. If you step out and look at this, it's trying to hold this support here, so it could be a good support area. Yeah, it could turn out that this is a really good support zone to take another long up or something. But I'll try to post this one as quick as I can, and we'll just see what we see on it. But that's what you want to look for. You want to look for coins that have a lot of activity. That's the most important thing. And personally, I like these coins that go up 50 to 100% in a day, to where I can take a short on it. But shorting is much more difficult, so be careful with it. Only do it once you're comfortable with it and have experience. Experience is the most important thing. Okay, so that's it. If you have any questions, definitely feel free to post below in the comments. I'm happy to take any requests on coins. Just remember that some coins are just probably going sideways right now. They're not doing much, but I can definitely give you the support resistance areas. if I get a lot of requests, just understand it may take a while to get to all of them. But I'm more than happy to do this for you. I just want to help people. That's all I'm here for. Remember, and I know a lot of you are from Crypto Mentor 99's channel. So, remember, keep supporting him. He's a good voice in the space. Yeah, I guess that's about it. So I will see y'all in the next video, probably be next week. And, leave a like, whatever you want to do. We'll talk to you soon.